Today I have Tim Davis with us, and he is going to talk about some of the products available in today's market. He is with CMG Financial. Thank you, Tim. And if you could tell us a little bit about yourself and your background.
Thank you, Lori. So yes, again, my name is Tim Davis with CMG Financial. I've been in mortgage banking, just celebrated 27 years in the business. So seen a lot of ups, lots of downs, and this will be the third recession that I have been through. But there's ways to navigate that, and I would like to go over some of the programs that we have that I think would be beneficial to help you navigate that.
Perfect. Let's get started.
All right. Thank you, Lori. Another program that I would like to speak with you about is our buy down program. So the buy down programs, it comes in three different options. It comes in a 1-to-1 buy down, a 2-to-1 buy down, or a 3-to-1 buy down. And so a lot of people are going, what is that? What is that, Tim? So that buy down is, for example, the 3-to-1 buy down. So let's say current interest rates are at 7%. So on the 3-to-1 buy down, your interest rate will start 3% below that 7% rate. So in that instance, it would start out at 4%. So that 4% would stay there for 12 months. And then on the 13th month, it would go up exactly 1% and go to 5%. It would stay there for 12 months and then go to the next move, which is the 6%, and stay there for 12 months until it goes to the last move of the 7%, and it stays there for the rest of the term of the mortgage. So it is a fixed rate product. It's not an adjustable because it's not tied to prime or anything like that. So that is a utility that a lot of folks are using to be able to keep their payments low, where they can edge in to their house payment. So, and that comes in also a 2-to-1 buy down and a 1-to-1 buy down. Now those do have cost for those programs. It does have discount point cost, but you can negotiate that to be paid by the seller, or the buyer can pay those themselves. Another program that I would like to speak with you about is our 10-6 program. So the 10-6 program is a 10-year fixed rate mortgage, and then after 10 years it goes 6-month adjustable. So why use that program over, say, a 30-year fixed? A lot of people are using that program because it will offer you about 0.75% on the interest rate reduced compared to that 30-year fix. So your monthly payments, of course, is going to be a lot cheaper by using that 10-6 program. And then you have a lot of folks that say, hey, Tim, I don't want to do adjustable rate. I'm scared of that, and I would have to agree if we're talking about a 2-year or a 3-year, and then it goes adjustable, but you have 10 full years to be able to take advantage of another program that I'm fixing to lead into, which is called the refinance rate reduction program. So on that program, we cover, CMG Financial will cover within 5 years of the date that we close your purchase loan, we will cover the cost up to, our lender fees are waived, so that saves about $1,400 right there. Also, we give $1,000 credit towards any third-party fees, and third-party fees are like your appraisal and your title company fees, all of those type of fees. So we cover that $1,000. We waive our $1,400 lender fee on that, and then we help you refinance and get that lower rate, and then you can lock into that 30-year fixed rate mortgage. But we're here to be able to provide all options for you after the close of your home. We're still here. Another program that we have that's unique to CMG Financial is called our lock-in shop program. Now, that program is where you can be able to lock your interest rate at today's rate and not even have found a subject property address yet. So if you're just starting to look for a house and you do the lock-in shop program, you can lock that interest rate to secure it, and then you have 45 days to turn around and identify a property. And then in that additional 45 days, to close that loan for that property. So that is a great program. We've done a lot of that. There is no cost, upfront cost for that program. So that's just a benefit for you, the customer. For folks that's looking for new construction, say they're going to build a house or have a builder build their house. So there's a program that we have on that, and it's where you can lock the rate on that loan for up to 9 months. So 9 full months that you'll have, and your interest rate is protected on that. So what makes that beneficial? Why is that such a big deal? Well, as interest rates have rose, just since September, interest rates, first part of September, the interest rates was in the mid 5s. And today on a 30-year fixed, they're 7%. So, I mean, we're talking a pretty large movement in a short period of time. So locking this rate in protects you, and then you've got that 9-month build time where you can build that house and have it turnkey. So that's an extremely beneficial option, I think, to go with that. There is a cost to that extended rate lock program. The cost is $1,000, but that cost is refundable, where at the time of closing, we at CMG, we take and give you a lender credit for that $1,000 that you put up front for that rate lock. As long as the loan closes, you get that lender credit back.